All right, guys. So when we came in this morning, I rewound it to just before the open or just after the open, and it's May 16th for this video. But to recap, one of the first things I do is an email I read is from Bloomberg, and it just goes over and recaps. It's about 6 in the morning Central Time. And everything I read out of that email, without knowing where we're opening up, because I haven't turned my screens on, was negative. I'd have thought we were down 10 or 20 points from yesterday's close. Every piece in their email was bearish for stocks. Strong bond market, pricing in trade wars, the Chinese company that wasn't going to be allowed to buy from American companies. Everything else was bearish, bearish, bearish. Brexit, and the pound was getting slapped around. So then you turn your screens on, we're actually up 8 or 9 points in the S&Ps. It's not a huge rally, but when you think you're down 10, you're up 10, should put you in a position to think that maybe it's bullish. Be careful if you're short. I'm never saying that. What's the matter with you guys? You didn't see it go from 64 when we opened to 90? Nobody should ever talk to you like that. But there are clues, like when things should happen and they don't. That's the key. Those are the clues. When something should happen and doesn't, gives you your best tells, so to speak. So I'm replaying this kind of fast. And what you're seeing in here is more red getting breached than green. Let me pause it a second. When I say more red than green, these are edge zone. These are the quick edge zones that come in. That's a green one. Those are buyers. That's selling pressure. And when you start to get more red ones, especially with these two in this entire area get breached, you got to think that the bulls are in control. Now, this is a few minutes after the open. So you take that in conjunction with bearish news in the overnight session, and yet we're opening up strong, and we're starting to get this opening drive. So we play it 5 times the speed. As you're walking through it, you could notice that when you get some green, it stays bullish. When red comes in, just like now, it just seems that they could breach those easier. Another red comes in. It's like, well, when do I buy it? If you're bullish, at moments they take those out, like in there. And you didn't have to be this quick because the market is running 5 times the way I'm replaying it, the speed. But not only one red edge zone seller, but 2. And let's just play it through. And this was, just this walk up, and they didn't look back. When they don't look back, you got more shorts that just do not get a chance to get out. Just always remember this, too. Most people's pain is they can't get into trades, and once they get into trades, they can't get out of trades. And write that down. Number one pain point is pulling the trigger to get in, and then once you get in, pulling the trigger to get out. So when you get people short and stuck and they can't get out because the market doesn't retrace enough to give them a chance to get out, it's a self-fulfilling prophecy, and it becomes a snowball that keeps rolling away from them and getting bigger and bigger. And you can notice that when you get green edge zones, they react to the upside a little bit better than when you get any kind of red ones. When you get to some inventory levels, they just could take them out and go. Now, there was another moment, I'll let this thing keep running, where it was chopping sideways right underneath the high. And I know, because I get this feeling, so I know a lot of other people get this feeling is, hey, this is the top. This is the top. This is the top. This is the top, as it's chopping sideways. There comes a point where all the people who want to get short are short. It's not getting them paid, which means not really going lower, and then they all start running to the exits. And when could you see that? Well, you look at another market. The NASDAQ started jumping at not this particular moment. I'm going to show you in a second. The NASDAQ jumps. We run into an iceberg with a lot of sellers. As soon as they get through there, it was gone off to the races. Let me pause it and run it 15 times. Let's move through here pretty quick. You're going to see it chop back and forth at some point. And what that does is it gets everyone who missed trying to get long are anxious to get short, because the mind says when you miss something, you try to get that feeling covered as quick as possible. Right there. I stopped it. This is some chop that doesn't look like it's a long time, but it was. Was this it or was what the 75? There was actually two moments. See this iceberg? Let me play it. It was higher than this. It was 70. The low of the range was 77.50. So similar though. You see this iceberg 2,500 contracts. They get through it and they run. Similar setup, but let them chop around here for a while. Going back to what I was saying is that when you get your mind misses something, what does it try to do? It tries to get that back as quick as possible. So if you miss buying it in a 10-point rally, you try to sell it, catch a 10-point break. The markets don't care that you missed it. So here's this chop. This is the consolidation I'm talking about. And 77.5 roughly becomes the bottom of the consolidation. And every time you think you had some red, including myself, some green that got breached, including myself, I thought, well, maybe we had a chance to go down to some downside inventory. The answer was no, and the answer was no. And then it became a moment where it was right there. No, it wasn't right there. I'm not looking at the NASDAQ right now, so that's what drove us up. Let's look at the NASDAQ at the same time. Oh, it's not going to line up together. The NASDAQ drove us up, and I had said in the room, you got all these shorts stuck, and we're going up. It wasn't in this moment. It comes... Look at all these rotations of 77.5. Can't go down, can't go down, can't go down. You're also frustrating longs because you can't go up, can't go up. But look at the context. Upside's been the right side for the first 35, 40 minutes of this trade. Of course, they're going to have a little bit of an advantage. There. Next time I've got to run this along with the NASDAQ so you can see. Right here, you see how many contracts traded 80? And then same thing happened over here, 2,500 traded. This one we go up and come back through. You didn't have the NASDAQ on the team with you. Same price. Someone had an awful lot to sell passively. When the market finally built up enough shorts in here to create the buying, to take out those, to take out these, it was off to the races. So come back and you say to me, how do you know it was probability to continue to go up? It's an ancillary market that's not on the team in here, but is on the team in here. It's the cousin, it's the sister index that trades along with the one that you trade. You put yourself in a position to be patient. You tend to see the better trades that you're looking for. And like one of the guys in the room said, and he heard it from someone, you know, if you see a trade, take it. If you have to look for a trade, when you find it, don't take it. And that goes back to trade what you see, not what you think. And so if I play this through, of course, you're going to see continuation of the upside. Right now, live, when I'm doing this, it's trading 88 even. But usually on a day like today, the best chance for a decent pullback, unless there's negative news, the best chance for a decent pullback is going to be in the last hour. And you could see them roll up. So I hope these replays of real-time highlights and some lowlights that we talk about in this room are helpful because it addresses the pain point of pulling the trigger, not only to get in, but then once you get in, getting out. And to use a quote from a colleague that I traded with, Prop Brent, who talked to our Edge group on Tuesday, he says, I don't mind being wrong, but I do mind being stupid. So don't be stupid. Know where you're out before you're getting in. Know where your exits are before your entries.